Welcome to ALAQA, a podcast about the relationships shaping systems, capital, and the climate transition. Today, I'm joined by Laure Wessemius-Chibrac, a seasoned investment professional with nearly 3 decades of experience in the financial sector, specializing in sustainability, impact investing, and the mobilisation of institutional capital. Based in the Netherlands, she has built a solid exposure to emerging markets as well. She currently serves as the founding managing director and CEO of Netherlands Advisory Board on Impact Investing, NAB. In this role, Laure has been driving the agenda to scale up impact investment from pension funds, insurance companies, and asset managers. And she also works to alter structural investment patterns. In this episode, we talk about how culture is a key factor to achieve change in finance, and how risk is a mix of facts and perception, which therefore can be shifted. Hello, Laure. How are you?
I'm well, thank you. Good to be here with you. How are you?
Laure, I'm very happy to have you on this show, on this discussion. I've had the privilege to meet you during a panel conversation with our friends from Impact Europe on a topic that is so important around how can we deploy more capital into the hands of organizations, fund managers, allocators, one way or the other, with a long-term perspective around finding solutions to the problems of citizens. And I feel at that time, the conversation wasn't long enough. So
It never is.
when thinking about who should we be talking to on ALAQA, I immediately thought of you, but I didn't want to reach out too soon because we didn't have time to entertain longer conversations after this panel. So I was a bit shy, to be honest, to reach out immediately. So let's publish some episodes so that she can have a sense and see what she says. But I'm really honored because you have such a global experience and I can't wait. And I can't wait for this conversation to unfold. So thank you for taking the time.
Well, thanks for having me. I'm excited to have this conversation with you.
So first off, Laure, I would like to start with your story. So not your story as in your hero story, because I think you and I don't necessarily believe in the central rows of heroes in this global play that is life, but really focusing on perhaps the big steps that led you to consider or to approach your role around finance and around impact in the way you are practicing it today. That would be interesting, I guess, for us.
Yeah, thanks. So I've been now this year 30 years in the financial sector, and that triggers a lot of reflection also for me. What I read down, I started joining finance just because I'm a bit of a math nerd. I've always loved working on transactions, structuring. Even when I was in high school, I loved scientific subjects. So going to finance, I studied at a business school in France. Specialising in finance was a sort of very natural thing to do. And actually, I was super happy in finance, working on big transaction. It was teamwork. I really loved it. Both combination of intellectual challenge and teamwork. I really love that combination. But after the birth of my first child, everything changed. And instead of living in the present, I started thinking about my legacy, about the future that I would leave for my child. It changed my view on the world and on the input that my own work had on the world. So I actually started shifting, developing an interest in sustainability and doing some volunteer work. And one thing leading to another. About 15 years down in my career path, I joined an international NGO that had an impact fund. They're called Coordate. And I had the immense chance of working with a team of very passionate people that taught me basically everything that I know now about impact investing and development finance. And I was tremendously enjoying that second part of my career until the UN released their Sustainable Development Goals in 2015. And I actually had sort of second aha moment, and the first one being the birth of my first child. And that second aha moment was that I realized I was doing very impactful things with the organization I worked for. We were working, financing entrepreneurs in the fragile and conflict affected states. There's not much more that can be very impactful, but we were completely lacking scale. In 2016, 17, 18, we started really integrating the SDGs in our work at Cordate. And then I realized that we were a drop in the ocean. And so I left the organization actually with a lot of pain in my heart because I really loved the people I was working with there. And I started having a lot of coffees with many people in the Netherlands, thinking about how could I connect my old world of capital with my new world of impact. And that's how I landed in advocacy. And that's what I'm doing right now with the NAB, the Netherlands Advisory Board on Impact Investing. So for the last 6 years now, since 2019, actually.
Can you tell us a word or two about how you see the role of NAB? Because even if some of our listeners may have heard of it, may have seen reports that you release, I would love for you to explain how you see the role you have beyond the pure advocacy.
The NAB is part of a global partnership led by GSG Impact. And GSG Impact was created in the early 2010 years by the G7. That was the G8 at the time. And the idea was for governments to support private capital mobilization for the realization of their societal ambitions as governments. So it started with the G7 and then G20. And at some point, the Netherlands thought, hey, wouldn't it be nice to have a Dutch chapter of the GSG in the Netherlands? And that was around 2018. And I arrived and I thought, let's give it a try and set up the Dutch chapter. And what we do in the Netherlands, so each country is context dependent. So you do what you need to do to develop your own ecosystem. In the Netherlands, interestingly, we didn't start from the government side. It was actually the private sector that originated the creation of the NAB with a group of very ambitious, very impatient.
I love impatience when it comes to
Yeah.
impact. Let's go.
Yeah, that definitely. So first group of people thought it's nice to talk with each other with all these networks, but we really need now to move into action. So with a group of institutional and impact fund managers, asset managers, we actually started setting up the NAB. And the ambition at the time, we started from the fact that the Dutch ecosystem was quite advanced. There were lots of pioneering organizations. Think about Triodos, ASN, but also FMO, the Dutch Development Bank.
Yes.
But actually, these organizations had developed really well, but needed something different to be able to expand further. There were two types of needs. The first one was to be in touch with different types of stakeholders. So how can we stop with the silo mentality that is very often the case in many countries? And how can we convene all these parties together? So that's the role number one that we thought, okay, let's try to do that as NAB. The second one was to bring the government in the equation. So public-private collaboration is necessary to break the silos and to be able to make impact investable. And in the Netherlands, we have a very neoliberal government since a very long time. And that government was very hands-off when it comes to private sector involvement. So we thought it would be a good idea to inspire them by sharing enabling policies that have been applied by other countries. So learning, using, embracing the GSG partnership globally, and then using that knowledge to try to bring that public party that can be very catalytic, and that was necessary in the Netherlands. So we want to convene, bring parties together, be the linking pin between all these different silos. We want to defragment the ecosystem by making it more efficient and more connected with the convening. We want to, of course, educate and influence. So we have a big engagement agenda. For example, one of our leading activities is our 10% target program. So we want to convince and support institutional investors in the Netherlands. Think about pension funds or insurance companies or banks. We want to convince them to commit to invest 10% of their assets into impact. And that's to give you an idea worldwide. If you base your estimates on what the GIN, the Global Impact Investing Network, is publishing of their annual survey, I think right now you're probably globally under 1% of impact investing compared to total assets. So we have that ambition to go to 10%. So that's what we've been pushing for the last 3 to 4 years.
I would love for you to expand a bit on it. Educate and influence. Why, in your opinion, all these organizations the pension funds, the triodos, and these big, very committed organizations have so much difficulty to expand their allocations into topics that we could label as impact, aka solutions to the problems citizens are facing, whether social or environmental. Let's wrap it in a very summarized way this way. Why do you think they're struggling to invest in these topics when fundamentally, if the ecosystem goes down, if the biodiversity falls, if social issues rise too high, they won't be able to keep on protecting their capital long term? So why do you think, if you take from a very rational stance, it's the obvious way to go, why do you think they're struggling to make this choice and to allocate more money into this type of topics and entrepreneurs and investment allocations?
When we started our activities, we wrote a report on the state of the market in the Netherlands, and we published that one in 2022. And the report had the quantitative size of the market and qualitative contents. And on the qualitative side, we investigated what are the key barriers and enablers in the ecosystem. And actually what you're naming right now is one of the key 3 barriers. So there are 3 types of barriers: market efficiency, regulation, and culture. And the third one, culture, is actually the core of the problem. So a few years ago, Mark Carney, who is now Prime Minister of Canada, but used to be the governor of the Bank of England, made a very famous speech where he referred to the tragedy of the horizon. We know that things are going to turn bad, but this is so far away from us that we can't integrate them in our risk models. And that's the problem that most investors, big asset owners like pension funds, insurance companies, or banks had in the past. They had to make a choice between short-term profit and long-term preservation of value creation. We see a shift happening right now. Some of the leading organizations in our country are insurance companies. They were the first ones setting a 10% target. 3 largest companies, insurance companies, ASR, Achmea, and VGZ, I'm trying to pronounce it in English, set a 10% target. And that's not a coincidence. It's because they now realize that the externalities, so the climate, in particular, extreme weather events, are having an influence on their activities, on their core business as insurers. And then that's why they are shifting the investments in their portfolio towards investing into solutions. Because otherwise they realize if we don't start thinking, contributing to solutions for the future, our business model will not be investable anymore. It will not be sustainable, financially sustainable anymore. So that's the first thing on the insurance side. On the pension fund side, more and more pension funds are thinking about their fiduciary duty. They are approaching it differently. So it used to be focusing on providing a good pension. So that was the key, the core of the fiduciary duty. Now the pension funds are adding a little sentence after that. They say good pension in a livable world. The element that they have included is actually not only the what are you going to receive financially, but what is your buying power with that money. And that buying power, that includes being able to access affordable housing, being able to buy still food without the climate crisis having increased 3, 4, 5 times, being able to have access to healthcare without air or water pollution. So all these different aspects now are being integrated. And what we see is a shift in mentality at board levels, that the boards are now more and more also consulting their clients or pension fund participants and asking them, actually, what's important for you? Is it only return, or next to that return, do you want also your money to be investing in a certain way that is protecting or supporting people and planet? Actually, majority of people, 80% of people, want that for themselves, for their children. I even had a dialogue session a few months ago with pension fund participants, and one of the pensioners that was a grandfather, and I told him, my ambition is that at least 10% of all assets under management are invested in impact. And he said, yeah, but Laure, if you mean what you're saying about the climate crisis, biodiversity,
It's more than 10. It should be more than 10.
I find you very unambitious with your 10.
It should be more than 10 for sure.
Yeah, 100%. And I thought, wow, it's the first time in my life I've been called unambitious. So, but it also tells you that when you explain to citizens, nobody likes finance. I mean, besides the finance nerds that are in there and actually love it. But if I talk to my mother, she's a doctor, or my friends who work in other sectors, yeah, they don't like to talk about finance. They find it a little bit scary. If you talk with young people about their pension, it's so far away. It's something for old people, when actually we have to take care of that. And we know that, I think it's in the UK, there's an organization called Make My Money Matter that has researched how much impact does investing your pension in a sustainable way has on your CO2 footprint versus your lifestyle. So it's no more flying, going vegan, and using green electricity. These three together versus the savings have 21 times more impact than changing your lifestyle. So I'm not saying that you need to put a Côte de Boeuf on the barbecue tomorrow, but think about the power that money has. If you explain that with facts to consumers and citizens, they will ask for change.
If I may, Laure, it's not even the power of money, it's the power of investments. Because the story about the power of money has been told a lot to individuals, to citizens with their hats of consumers, in the sense that we have been told, and we have been collectively shamed by some people, to be honest, that we should be deciding what we should be spending in a way that feels more ethical, more responsible, etc. And that if we don't spend it in a certain way, we are the cause as consumers/citizens of all these problems. By the way, because daily spending decisions for a family are mostly done by women in a very large majority, you see even the second layer of shaming the consumer's decision. But that's a story for another day. Back to the power of money. It's very interesting what you just said earlier about nobody likes finance or nobody likes to talk about finance. I think there's a shift between nobody likes to talk about finance as a big, bizarre, very sophisticated, a bit opaque, a bit greedy thing, right? There's the topic of money. There's the topic of capital and savings, meaning the thing that may protect me from the difficulties of life or will allow me to build my projects with my family, etc. So you see the shift between these words and their meanings and the underlying assumptions between these words. I would love for you to tell us how, in the discussions that you have with the decision makers in either the pension funds or your members or the board participants of the companies that you interact with, how do you try and put the light on these difficult nuances, which can very quickly put away the responsibility from the actual decision makers to people who don't have that much power? Can you tell us how you do that?
That has been one of our challenges. So from the start, we don't tell people what to do. It's very important to be humble. Finance has been practiced also in a certain way for more than a century, probably. In some ways, finance is still implemented the way that I learned it in business school 30 years ago. So you have to understand that there's a certain aversion to change. So the way that we approach is one, we don't tell you what to do, but we support you. So supporting organizations by developing tools to understand better. So, for example, organizing events on biodiversity, climate transition, etc. But it's also showing them inspiring examples from their peers. So what we've noticed works best is when you show one pension fund what another pension fund has been doing in impact, then they realize, oh, but actually these guys have the same regulatory context, they have the same internal challenges. If they can do it, my organization can probably do it too. So making sure that the examples are shared, broadly shared, shining light on the leaders, making sure that they're well understood. Then bringing people together as well, because it seems intuitively that people in the same sector will talk to each other. But actually, sometimes even in the same organization, we are the one telling another person what their colleague has been doing. Never assume that people know what is happening in their sector or even their own organization. So it is very useful to communicate clearly, also to bring order in communication. There are many publications about impact investing and what it is, and sometimes it's slightly different. Sometimes it's even contradicting each other. So what we have been trying to do in the Netherlands as NAB is really to bring structure and information and to make sure that whether you're a newcomer, an intermediate, or an expert, that you have access to the right level of information, and we help you find your way in the jungle of information.
It's very interesting what you're saying, because back to your three big obstacles that you mentioned earlier about culture. And you just mentioned the aversion to change, which we can draw from change to risk. It's also a question of risk taking and perception of risk. Can you give us an example of how you engage with individuals within these organizations? Because again, we're saying pension funds, but in fact, perhaps it's 10 people within each and every pension fund. And it's not only the CEO, and it's not only the person in charge of sustainable finance. I guess it's many different people. Can you give us an example of how you engage on this question of opening a discussion, for instance, on risk? And I know that is very dear to your heart, to influence some curiosity, let's say. Let's put it this way, some curiosity to consider doing things differently.
So you mentioned 10 different people in organizations. Actually, in most organizations, it's 3 times that.
Okay, even better.
There are indeed several levels where you need to educate. So you need to make sure that maybe not the CEOs, they're very busy individuals, but other board members like chief investment officer, that we have regular contact with them. We bring them together with their peers, and we make sure that they know what's happening in the sector from their peers. One level below, because they are the ones making the decision. And maybe one more element, in our own board, we have 9 people in our board. We have more board members than team members. That's something that we've done intentionally, because our board members each represent a part of the ecosystem. We have 2 pension funds, 1 insurance company, several asset managers, a foundation. So all these people have influence, and they are all C-level, or most of them are C-level. And that was a choice that we made from the beginning. Actually, some of our impatient founding members said, if we want to be successful, we need to influence successfully as well. So the people that will come around this table in the board are not only people who specialize in sustainability or impact, but people who can make decisions. And then not only do they make decisions for the NAB, they make decisions for their organization, and they are influencers in their own subsegment, so in the various silos. So whenever we publish something or reach out with an invitation, etc., they are a great help. So they help us influence at board level. Then, of course, we've got the management level, the head of sustainability, etc., and their team members. So that's where we educate a lot. We offer to them to come to events, to learn from each other, to participate in working groups. And then there's the really experts. So we involve them in working groups. To give you an example of one of the barriers, really completely cultural, that we addressed a couple of years ago. In 2022, when we published our State of the Market report, one of the comments we often heard was, oh yeah, we cannot invest in emerging markets because it's too risky and it's costing us too much capital. And a few of the NAB members, including myself, I had worked for Coordate in emerging markets. So I knew that, of course, there's a higher country risk, and not go too technical, but generally speaking, the investments were not necessarily much riskier than, for example, financing an SME in the Netherlands. So we formed a working group with 1 person in risk management from ASR, which is an insurance company, 1 person from FMO, the Dutch Development Bank, and one
Mhm.
person from Cardano, which is an asset manager active also in emerging markets. And then together with also two persons from the NAB, we worked and opened completely the Pandora box of Solvency II, which is a regulation,
Uh-huh. Uh-huh.
looked at the capital requirements under Solvency II for private
Uh-huh.
debt in emerging markets, and calculated, okay, on the back of DFI portfolio with many data points, apply the regulation to our sample, and then conclude actually that the regulation was completely right, because that was our initial assumption, was maybe the regulation is not right. It's asking too much capital for something that is
Mm.
not risky. No, the
Mm.
regulation was right, but what we discovered is that actually it was not high demand of capital. What happened is that the institutional investors, because it's emerging market, didn't dedicate any resources.
To investigate the topic, you mean? Yeah, yeah.
Exactly. And because they didn't, they made some assumptions that were wrong.
Mm.
So again, that the core of the problem is not the risk itself, it's the
Mm.
perception of risk that is reinforced by the lack of resources dedicated to the topic, because if it's risky, you don't want to invest in there, so you don't make resources available. So we published a report on that, and we're still using that report to try to convince organizations internally. And the way we built our report, it has three ways of being read. You have the executive summary for the board members, 2 pages, being mindful of their time.
Yeah, crisp. Mm-hmm.
Then you have the core of the report, which is for portfolio managers, etc. They can look a bit into the results of our analysis. And
Mm-hmm.
then you have the annexes that are really for the actuaries and the risk managers, professional risk managers. They can look into
Technicalities. Yeah, yeah. Mm.
exactly, lift the motor cap and then look into the engine and see what's happening behind. But it's really important to convince all three layers, because even if the board is convinced you need to do more impact, if the middle management doesn't understand the impact and says, yeah, but we cannot implement it, it is not possible with our organization, then you have a blocking factor. So you really need to educate at all levels.
But do you think it's only a question of education? Because even if we have more information, more accurate information, because
Yeah.
in this case, this is what you brought to the table, more accurate, beyond perception, beyond generally accepted assumptions or common sense. There are also the habits, there are also the practices that are encouraged for a long time in one given organization. So, do you think it's only a question of more accurate information, or is there something more that should be considered when it comes to creating change in investment decisions for impact?
You need leadership support. What we've seen in the Netherlands, that leaders are now evolving. So a few years ago, our conversations were more about why should we be doing impact investing, when actually now the conversations are more how are we going to do impact investing. So there's really a shift in mentalities, and that's probably due to many external factors. I wouldn't say we are aspirational, setting targets 10%, etc. But I think
Mhm.
the world is changing, and leaders see the world changing and adapt as good leaders. They listen to their clients, they see what's happening, the influence that biodiversity crisis or climate crisis or inequality crisis or depleting democracies can have on their business.
Mm.
I think a good business leader is capable of assessing these risks, these
Mm.
externalities, and
Mm.
impact is one of the solutions. So
Mm.
there's a
Mm.
sort of a natural movement now towards impact.
I understand. Every relationship comes with tensions. So, can you tell us about one challenge that you faced navigating complexity, which is this web of interconnected links between individuals or between organizations within a given ecosystem? And how did you work your way through it?
We're relationship builders. So our biggest challenge is to get people to actually listen to us. And the solution is to find a sweet spot for them. So what's in it for them? It's not about us and the NAB. It should never be, actually. Of course, it's about society and how can we live in a better world for people and planet. But fundamentally, what we're trying to do is help people working in these organizations, support them. So that's why whenever we approach them, we always say, we're not here to tell you what to do. We're here to support you if you want to change. For me, that's one of the key takeaways that I've learned over the years. We're a small organization. We don't have limitless resources. And some people in organization have reached that tipping point where they're ready to hear us and accept our support. And some people in organization aren't. And the one thing I've learned as an impatient, sometimes maybe too perseverant individual is that you have to let it go. If they're not ready, they're not ready. And you can agree to disagree, and then you can come back in a year's time, in 2 years' time. It doesn't mean that we let go of us trying to influence a person or an organization, just means that we do it differently. For example, by just sharing reports or making sure that facts are well understood. So we communicate on that, but we don't waste time on trying to convince people that are not convinced. So you need to have had that first step taken to be able to build on.
There's a topic that is not discussed enough, in my opinion, when it comes to relationships in changing projects and in a moving world, which is the topic of trust. How do you build a trust with individuals in large organizations? And because a pension fund or an asset management firm, for the people who are not familiar with the size of these organizations, they are very, very well-staffed companies. So how do you build trust with individuals that the education you will providing or the information you will providing or the advice you'll be sharing will not take them to a place where either their individual careers or the way they will be perceived by their colleagues or by their bosses or by their fellow organizations will be detrimental? How do you build that trust that you're nudging them or helping them in a way that is right for them as well? How do you do that?
That's a super important question, actually. And you're touching exactly the sensitive chord. First of all, we are a nonprofit, independent. We have a special status in the Netherlands that is called ANBI, ANBI, and that is for organizations that work for the common good. So whenever we approach new persons or organizations, we always mention that we're not consultants. We're not here to earn money on your back. We're here to really support the growth of the ecosystem. So that's element number one, to build trust, to show them we're independent, we're not here to sell anything. The second aspect is that when we educate, and I forgot to mention that, so I'm glad you're asking the question, we don't educate ourselves. We're a facilitator. So we make sure that the experts are educating the rest. And the experts are actually very often, but not only, the members of our community. So we have a community now of 43, 44 member organizations, all of them leading organizations in impact investing in the Netherlands. And whenever we organize an educating event on biodiversity, we invite the ones that we have found to be the most expert in investing for impact in biodiversity. And some of them are members, some of them are knowledge partners, and some of them are just completely different organizations. But we always try to bring different perspectives. So from an asset owner, from an asset manager in the Netherlands or in Europe or in emerging markets. So we try to bring the diversity of perspectives that makes the learning very rich. And building that trust, it didn't happen overnight. We formally started, let's say, beginning 2021. We've had quite a few activities since then. And our motto is always under promise, over deliver. So that's very important as well. So don't oversell what you're going to deliver. We try to be very humble about what it is that we're going to bring. And maybe another element as well is that everything we do is accessible to all and free. So you don't need to pay to go to our events or to download our publications. And we think it's very important if you want to make impact investing inclusive and accessible. So if you want to grow impact investing, you need to make it accessible. And if you put a price tag on it, then you reduce the accessibility of impact investing. So we decided from the beginning, where we can, everything is free and open to all. And so over the years, we've had more and more people coming to our events or following us when we're active on socials or when we have publications. And that's really because we have built that trust, but it didn't happen overnight, obviously. Yeah. We don't favor anyone. Very often at conferences, if you want to be a speaker, you have to sponsor the conference. That's not the case. We don't ask the speakers to pay. And because of that, we can afford to pick the ones that are the most.
Yeah, you curate. Yeah. Okay, okay. I have a last question on this topic, Laure, which is it's very common in finance to look at benchmark, to look at best practices. And it's a bit what you mentioned earlier, that the fact that this organization is doing this may push me as a fellow organization to do perhaps the same, perhaps not 10% or 20% better, but just, the same level, because in hindsight or in the back, there is this competition level. Like, I don't want to lag behind. So do you think the question of speed of the change that is needed is compatible with this very cohesive? It's good for cohesion. There's no outlier because everybody's taking a step at their own pace and nobody stands out too far out. But what about the speed? Given we're in 2025, the tragedy of Horizon is a very important question, but 2030 is in 5 years. It's within a business plan time frame now. So there's not this excuse anymore. So what about speed?
No, so that's one of the dilemmas that we have. So on the one hand, you want to mobilize, super important. I think more than speed, volume is important. And we actually see the volume happening now. The counterweight of that is that in any ecosystem, you need the ecosystem to grow in a harmonious way. So if you have a massive supply of capital, when the demand side of capital is not following up, that's an issue. And very often what we hear from institutional investors that want to invest more, they say, yeah, but I can't find bankable projects. So you have to work on the demand at the same time. And actually, that's more the blocking factor than really the supply side, because there is money more and more. But the problem is, how do we invest it? And how do we invest it? There are two sub-questions on that. So first of all, is there a pipeline? And second of all, is the pipeline investable? And very often you have a mismatch between the conditions at which the supply of capital is being made available and the ability of the projects to respond to these conditions. So think about the ticket size, for example. Think about the maturity of the investment. So all these aspects, think about the regions as well. A lot of pension funds, for example, in the Netherlands, they've consulted their clients and the clients say, yeah, impact at home, important. Yeah? So Holland first. We live in a polarized world. And we know that 70% of the SDGs are in emerging markets. So how do you reconcile that? And that's where the third element, the public sector or philanthropy, for example, can be a very catalytic element to help de-risk or return enhance or aggregate these different tickets to breach that mismatch, that gap.
It reminds me of 13 years ago, there was this law which passed in France about women in boards. I don't know if you remember. And at the time, before the law passed, there was this big pushback from many CEOs of listed companies and large companies, which was to say, oh, we'd love to have women, but they don't match our, typical criteria. Oh, so what are these criteria? They need to have been CEOs. They need to have, I don't know how many languages. They need to have a global experience. Okay, but what about the men in your board? Do they all have this criteria set up? No, but it's different. But we want to make sure that women are capable and professional enough. So the bar keeps on being higher and higher. So when the quotas law was passed, end of 2011, so passed in 2012, after 5 or 6 years, as if by magic, there were women who were integrated, but also the selection of men in boards changed. So I wonder, if we take this metaphor, this parallel, I wonder what you could tell us about revisiting the criteria for traditional investments, not impact, in the light of the new climate era, in the light of the massive risks that we are facing collectively, so that the bar is not always higher and higher for impact to justify the value creation, the value protection. What about the traditional, the standard, the historic investments? do they still qualify to be investable if we take a refreshed view of the context? What can you tell us about this?
I think it's a very comparable story. So if you look at the SFDR right now, I'm taking the old SFDR, and if you're in
Yeah.
Article 9, which is most impact, it's not 100%, but you have a lot of reporting obligations. Whereas if you're in the Article 6 fund, which is basically, you don't care, you just focus on finance, you don't have to report anything. And the burden of the reporting is only on the impact side when actually clients, if they want to make a free choice and an informed choice, should know also about the impact, negative probably, of the Article 6 funds. So
Mhm.
there is that two weights, two measures kind of situation, which I think is completely unfair. So I think there should be, but if you see the current trend with the dilution of CSRD and CSDDD in the omnibus, I think the public sector is actually lagging behind and
Hmm.
is in a sort of rabbit hole now with polarization and opposition and politicization of every topic instead of trying to find real solutions. And in my view, I actually have more hope coming from the private sector because that's what I was saying earlier. I think responsible leaders anticipate on future developments. They are starting to realize that at some point, the climate crisis is going to be so bad that governments will have to put a carbon tax somewhere, and a heavy one. So they are decarbonizing their activities because that's good management, not because of activism, just because it's good business, just because the climate diversity and water crisis, etc., they are not going anywhere. So a lot of innovative entrepreneurs are actually developing solutions, and these solutions are going to be the leading companies in 5 years, 10 years. And last point, I think the financial sector is also going to support more and more disclosures of corporates and any kind of companies they invest in. Again, because they are more and more looking at how their portfolios are being invested. Even if there's no political will to implement that, the private sector is starting, and the financial sector is even more keeping the private sector in check. My hope is that it's going to keep the dynamic of sustainability in place because it is future proof, actually. So I think the common sense will prevail, and I hope it will prevail to create a better, more impactful future. But yeah, coming back to your women metaphor and impact, there's still a lot of differences between the impact sector or sustainability and more mainstream finance. But more and more investors are working already since the early 2000s, Equator Principle exclusion lists. And these exclusion lists are getting longer and longer. Even if you're not doing impact, you're actually, as a matter of good risk management, preventing more and more damage. So that's a way of evolving in terms of portfolios.
But you know, coming back to the dynamics with individuals within organizations, we can recognize that it's more risky on a personal level to suggest to reduce the allocation to an investment strategy which has been around for, I don't know, 10 years, 20 years, which has provided great returns in the past, even though the context makes it perhaps less future fit. But you will be seen, or you may be seen as less misaligned if you were, on the opposite, to advocate for a new investment policy or a new investment strategy with more impactful targets or impactful companies, because it seems new. So I think revisiting common sense, recognizing that we're not in the same context anymore and what was prevailing in the past will not help us in the future is a very difficult, I think, aspect to this question of how fast and how wide volumes of investment should switch in finance. But thank you for sharing your views, Laure. The last part of this show is a When I Love, because it allows our listeners to hear snapshots of your thoughts without me interrupting too much. The first one is about contrarian thoughts. Do you have a statement, a hot take, an idea that you feel is not discussed enough or should be seen as sometimes provocative by others?
Yeah, be positive. Sounds a bit cliche, but we live in a polarized way where everybody is pointing fingers at each other. let's drop that. Let's be constructive, build bridges, and agree on the common goal. We all have things that we all agree on. Let's start from that and let's stop pointing fingers. There are NGOs that are pointing out the bad that is being done in this world, and I think they're very important and I respect their work. But I think right now in society, we tend to be very negative about what others do. Let's look at the positive in what others do and how we can work together.
Cool. Other question, your go-to person. So talking about relationships, it's a shout out time. So who is your go-to person when thinking about supporting change in the system?
I think it's my board, actually. They are so inspiring. So my whole board, I have 9 people who have an enormous brain power together, and they are so incredibly inspiring. And they come from all sides of the financial sector in the Netherlands, but they have that common denominators that they all want that positive change and they all want to move things, really go to action in the Netherlands. They are a constant source of inspiration for me. So that's my go-to person. If I have a dilemma that I cannot solve, then I ask them.
I love the fact that you mentioned a moral person, a board, as a person. I love that. That's contrarian. That's not typical. So thank you. And now for the flash round. So big questions and short answers. The first one, a question you wish more investors would ask.
Consult their clients and ask them what they really want to do. So redefine a bit fiduciary duty. Don't think that you know everything, but ask your clients what they want.
One book, music, or practice that helps you to hold the complexity.
I think practice. I walk every morning about 30 minutes, 40 minutes with my dog. I look at the trees, I look at the skies, and I empty my brain. And that's my sort of walking meditation.
A system you'd love to see more of, more investment in, or a system you would like to see more disruption or change in?
Oh, that's an easy one. I think our current economy, we need to change it completely from linear and extractive to circular and inclusive. We need to change our economies.
And last one, what gives you hope in the capital/climate or impact space right now?
Private sector. I think the private sector is very thoughtful, very mindful. Not all of it, of course, but more and more. And I think more and more are integrating their societal role next to their fiduciary role. And I think that's important. We're shifting a bit from shareholder capitalism to stakeholder capitalism, and that's important.
Thank you, Laure, for these last words. And thank you for the discussion.
Thank you for having me. It was great.
Thank you for listening to ALAQA. If this conversation sparked something for you, share it, leave a review, and subscribe for more dialogues at the intersection of capital, systems, and transformation.